Mhm. All right, so I'm looking at beautiful pairs this morning. USD JPY had a nice move yesterday with USD JPY. I caught some of it. Started moving up after Tokyo session as well. Um, Actually, that was all right. So we're looking at USD JPY. Had a nice move yesterday upwards towards this daily decision making level. Um, some analysts have projected the 152 level, so somewhere down here. Ultimately just looking at that as just market sentiment, right? And just kind of gauging that with what I'm seeing here. Um, and so what I'm liking, right, I got this 15-minute decision making level right here. Before we made this move down, there's this large area of inefficient price action, right? Fair value gap. Same meaning, different type of terminology, right? So we have this 15-minute fair value gap, but we see on this move downwards, right? It's filled almost all of that fair value gap, right? So there's still some to go here, right? And not only do we have a fair value gap, but we also have this 15-minute order block right below it, which just signals this is where the money is, right? This is where the money is. And so I'm kind of looking at this two different ways, right? I would have liked entry. That's why I had this marked up here. I did not enter, but I was waiting for my confirmations to fully come in. But if it does not enter here, I mean, if it does not go down, fill this fair value gap, take out this order block and this liquidity sitting below it, right? If we just peek at this area of accumulation, right? The accumulation of orders, this is just money ultimately just being stuffed in one area, right? And then what happens? Buyers come in and just take over that area, right? And so accumulation, orders between buyers and sellers, and then buyers come in and ultimately put in way more orders than sellers did at this level, right? Um, but with that being said, left this fair value gap for price to come back towards and correct, right? So I'm looking at that. Like I said, I got this 15-minute decision making level right here, which is a really key area for me. Um, in terms of just understanding what price is saying at particular areas. And let me show you this is just so beautiful how this lines up, right? Because I use this decision making level to tell me, okay, buyers or sellers are going to make a decision to buy, sell, or allow price to range at this level, right? And then we also have this lead span B from our Ikamutu cloud. Lead span B is pretty much the decision making level of the Ichimoku cloud, right? Because it averages the price over the last 52 periods. It takes the high and the low and creates a midpoint, right? So at a decision-making level, I have data telling me that this is an average level where buyers or sellers communicate. Okay, so hold on to that one because I got one more, right? And so then I got my VWAP, right? My VWAP is the volume weighted average price. So it weights the average price based on how many orders are in a particular area, right? And so on my decision making level, I have the average price. So this black line is called the mean. And we've been through the basics of math class to be able to understand what the mean is, right? The mean, the average price. So this is the volume weighted average price. And this black line is the mean, right? And right at that level, I got decision making level, right? So all of that combined at this level, it's just confirming a number of different things for me, but ultimately confirming what I use this area for is there's going to be a decision to buy, sell, or consolidate at this area, but it also gives me a target area for entry points, right? So if I've not entered yet, what I'm currently waiting for is I'm waiting to see price move up towards this level, if it does, then I'm entering shorts. I'm entering shorts. If it doesn't, then it doesn't, and that's totally okay, right? But we're gonna be patient. That's kind of what I'm looking for on USD JPY right now. Um, so yeah, we'll see what happens. Might get an exit here from my gold trade. We got into profit, but I was looking to take it for my 1 to 1.5 ratio, which is fine if we don't get there at this current time. We are correcting for some reason. 6 o'clock, New York just opened, right? So let's see what happens at this area. Once again, what this VWAP is telling me. Look at the communication of area of data, right? So on this lead span B, which is the Ichimoku Clouds average price, its midpoint. We have that VWAP in the mean of the volume weighted average price, like both of them right on top of each other, right? That's just so beautiful right there. And then overnight, I was looking at this overnight, right? It was about right in this area, right? And I was eyeing once again fair value gap and order block. And then overnight, what happened? What did we get? Correction straight through that area. I was, of course, sleeping at the time, but that is when my entry would have been triggered, right? 1:40 a.m., my entry would have been triggered. Right. And then we obviously see that it got to that area. And so this is a good example for setting limit orders, right? Because even though I was sleeping, I could have put a limit order at this price level right here. So it'd have been, we can call it 23.7, right? And then it would have popped me in. And if it broke below this area, then it would have popped me out. It would have did all that while I was sleeping. But then, I literally would have woke up and I would hit, like I said, it was like 450, with only risking, 150 bucks on that one. So that would have been a clean entry. So just a learning lesson, right? It's okay to set limit orders. It's just a learning lesson as I'm getting price closing or crossing my VWAP here. Oh, you see it touched my VWAP. My alarm went off, right? You hear that? It went and touched my VWAP, right? Look at that. Bounce right off of it. What is that bounce saying? It's telling me that buyers are respecting this area. Sellers have been able to push us down there, but buyers are ultimately keeping us up, right? They're propping us up, right? And so, I'll still look to exit on a close below this area. Especially if I get it on this 15-minute candle. And I'll look to exit when we get it closed below that mean there. But until then, we're gonna sit patiently. We're gonna sit patiently. With New York just opening, I'm ready to see some volatility come in. So if I start to see we're back to UJ right now. If I start to see price move back up towards here, I'm gonna like that more than if I see price break this level. But either way, if price breaks this area of accumulation, right, I'm definitely taking it to this liquidity area, beyond this 15-minute order block. Right, so that's on UJ. We do have some news in 25 minutes, right? So that could definitely play a factor. We also had, I was actually doing some research this morning, and President Trump had mentioned that he's going to be announcing reciprocal tariffs. today, reciprocal tariffs. So I'm interested to see when and how that will impact the market in terms of sentiment, because that's literally all the market is. That's all the market is. Fundamentals move the market, technicals confirm the fundamentals and they validate the fundamentals. But ultimately the sentiment in the short term, right? So like I'm talking hour by hour, day by day. Nothing longer than that, though. Sentiment moves the market, right? All these articles that come out, tweets, analysts saying this and that. That's what essentially moves the market in the short term. On my board over here, you can't see it, but I have two words written down. One is macro wave. And what I mean by that is when we think of macroeconomics, economic indicators, geopolitics, all that stuff is on a macro scale, on a large time frame. It's going to happen over a long period of time, is not only where the data is coming from, but where the impact that we're essentially analyzing to see how it's going to impact the market. When we're talking macroeconomics, it's on that scale, right? And then I also, so that's macro wave because I want to understand the wave of the macro of the big picture. I want to see what's our trend on that big picture, and how the macros affect that big picture, right? And then I have the other word on there is a microwave, and not the one you're thinking of. But what would we do without that one, right? But no, seriously. So the microwave is kind of what I just mentioned a second ago, understanding sentiment, understanding the technicals, because the technicals are a huge part of the micro wave, right? If we're able to understand price levels, we're understand, inefficiencies in price action when it comes to fair value gaps, order blocks, liquidity, like those are something we want to identify in the micro wave, right? Because day by day, hour by hour, sentiment is changing, right? Um, when we think of risk on and risk off currencies, right? That changes daily, right? Risk off and risk on and risk off currencies. That's something that changes in terms of, okay, now we're risk on. Okay, now we're risk off. Okay, now we're neutral, right? And I'll show you something really cool that I like here from Baby Pips, right? They have this meter, right? Risk on, risk off meter, right? And this fluctuates all the yesterday it was literally on risk on. This is where it was. That's why I had taken a few buys on my risk on currency pairs, AUD, JPY. Actually missed AUD, but EU, um, uh, EJ, Euro, JPY. I took a trade on that, right? And so understanding how the market moves and what helps it move, right, is very, very important. Is very, very important, right? Um, so we got that respect at that level. That's beautiful from XAU or from gold futures. It's XAU USD, but now on the forex side, I'm trading the future contracts. Um, and so let's see, I was in a trade on EJ, right? And you see I got stopped out, but that's fine. This was actually me. So let me go over this one. So I went over USD JPY and what I'm looking for there. So we'll be patient and wait to see what we get there. Um, really quick, one more thing on USD JPY. Just seeing this, right? This accumulation, it's exactly what happened here. This is exactly kind of like the same type of play, right? Just look at this accumulation at this area. And what is accumulation, Marcus? It's just sideways movement, right? It's just sideways movement. Price, orders, money is accumulating in this area, right? Accumulating. And then we get this crazy buy. What is this crazy buy from? This is from CPI from yesterday, right? This is what this candle is from. Like this, and I can't make this stuff up, guys. Like this is honestly it's so beautiful the way that, I read these charts because I simplify it, right? I'm not analyzing each and every candle because that's just honestly just some of it is what we're looking for. It is essentially it's just chaos, right? It's just like n- every candlestick honestly does not matter if we can understand how it all moves as a whole, right? And then if we have one signal to be able to tell us, like sign language in a particular area, what the heck price is saying, what the heck the other candlesticks are essentially telling us, right? And what helps me do that? The three candle structure, the three candle structure. And if you look in this area, there's a number of times where we got that three candle structure. But the most important time when we got it was when? It was right on this move, right? It was right on this move. Now, CPI, I don't recommend trading that because, or any very high volatile news, just because the unpredictable nature of highly volatile news. But what I'm seeing here is this decision-making level that was created, which even though I didn't take this trade, that's just confirming what that three candle structure is telling me, because this was literally a time where in an obvious fashion buyers came in, right? Like it's completely obvious that this is the area where buyers came in, and ultimately on that area it gave me one, two, and three, creating that three candle structure. We make sure that the first candle in that structure is smaller than the second. We make sure that second candle is a different color than the first and the last, essentially being sandwiched. Um, and then we make sure that last candle is the biggest one of them all, and it's the same color as the first one, right? And you might be thinking, watch this, because before we got this candle, what was there? Three candle structure. One, two, three, before this candle even came in. So again, the fact that this was 5 minutes till news, what is this level telling me? It's telling me that there are decisions being made from this level, period, right? And that's all I need to look for to be able to determine where the that's all I need to look for to be able to determine where can price travel, where can it be stopped up at, right? Those two simply things. Where can it travel to, and where can it be stopped at? Where can it be magnetized towards? Remember, and where can the force field like nature present itself? Those are the two characteristics of decision-making levels: magnets and force fields, right? Magnets and force fields. And like so let's just take a peek at this, right? And then I got to get back into see what's going on, right? We bought up from this level. Where did we buy to? To this daily decision-making level. So before we bought from this area, right? Before we bought from here, this area was acting as a magnet. It was acting as a magnet. Before we bought to this area, it was acting as a magnet. The moment we got to this area, what did it then turn to? It then turned to a force field, right? What has happened since then? It has not come back. What does that tell us for the future? That is now an area we can consider a magnet, right? But there are a number of magnets before we get to that level. One, right, that we have to understand, right? So that is really my next target area if I was buying. This is the area that I will look to see price travel to, right? Not to mention liquidity, like I can get into the other things that I'm identifying at that area, but what is starting it all is understanding that decision making level and what it's saying, right? Understanding that decision making level and what it's saying. And so that was just beautiful from USD JPY there. Like honestly, it's just so beautiful. Um, And so what I'm waiting for now is news. I'm not going to enter anything prior to news because we're 15 minutes out. And I don't need to be the liquidity, right? You see all these people in here that are buying and selling, they're the liquidity, right? I don't want to be the liquidity. I want to enter after we've swept liquidity, right? Because ultimately that means either continuation or reversal, right? And so I'm gonna sit here and wait patiently. Let's take a look at my VWAP. So VWAP's cool. Let's take a look at my Ichi. Ichi, everything's in position right now. Honestly, like sells are based on just the look right now. Based on just the look, sells are what I would be eyeing right now. And it's gonna be on my 5 minute that I like to enter. Ultimately, my stop loss is going to be at this mean. So even if this mean were to come down, wherever this black line is, that's ultimately where my stop loss is going to be. If it's ever something where I don't like my stop loss being more than 50 pips, if I ever have a stop loss more than 50 pips, then I will adjust it to either use this lower band if we are selling, or to use the decision making level, right? Like I'll be able to find some areas, but I do want it to be relatively around this mean somewhere, right? Um, just for a number of different reasons of what that area is telling me, and when it's all communicating together, oh man, it's honestly like it clears up a very chaotic picture, right? Because when we look at the candlesticks and we just look at price, like if you really don't know what you're looking at, it can be chaotic. But to be completely honest, when I look at the chart now, my eyes are automatically attracted to the three candle structure. I literally can't unsee it. Like I can't scan. Like it just won't let. Like my mind won't let me, and I don't want it to let me. So I don't say the word can't like really at all. If it's something that unless it's something I have the complete inability to do. Right. That's the only time that I will say that word. I can't. And in this case, I'm using it because as I'm looking at the chart, I am unable to just look at candlesticks without my eyes finding the three candle structure. And so every time I'm scrolling and my eyes are just moving through this chart, every time I see a three candle structure, I'm attracted to that area, and then I identify what was going on at that area, right? And so, for example, right, I have a three candle structure right here. Why is that one? What am I thinking at this area? Okay, I'm thinking, all right, three candle structure here. We actually use this area to sell off of. But before we even like got to this area, if we look left, this was an area that buyers came in and also used, right? So I'm just looking at that to say, wow, this area of price has had action, right? It's had action. So even though this decision making level did not cause this price action, these areas are still communicating together. You see what I'm saying? Like they are still they are still telling me what this decision making level, what this three candle structure is supposed to be telling me, right? So let me see if I can just close it. Getting that respect there. And and we have news in 10 minutes, right? And gold will also be affected by this. Um, so if I do get a candle close, I'm gonna close this prior to news. I've not got candle close yet. It is teasing the idea of it. And if we just think about what the freak is happening right here, three candle structure. Like three candles. Three candles. It's from here. This is what started it, right? This is what started it. This three candle structure right here. It's a fair value gap, which I can erase that now because it got filled. That's what's going on at this area. Right? That's what's going on. This is an area of decision making, right? No candle close yet. 15-minute chart. I got 7 minutes left in this candle. Because we're approaching news, depending on how this closes on the 5 minute, I may look to exit on the 5 minute candle close. Because we're getting so close to news, and if we're already getting downward pressure, um, and let's say like we end up just tanking on news, right? I won't have any time to prevent more drawdown. You know what I'm saying? So I'll just cut the loss now, right? Because I can always get back in, right? Rather than accumulating a heavy loss, which is something that I gotta give myself a pat on the back there because it's something that, I have not done every single time. I'm normally like, I'll let it run if it's gonna correct, right? And that's like we don't know what's gonna happen. We have to play the probabilities and stick by that. And we just have to let that work itself out. Just have to let that work itself out. So we got a minute and some change left on this candle, but we see again, like even though we've broken below this area, we've broken below this mean, right? We see the respect that's coming in at that area, right? We see the respect that's coming in at that area. And this is a good example of understanding market sessions. Um, so my JPY pairs, I got this sticky note there for a reminder, right? So it's a lot of stuff we're trying to not trying, but it's a lot of stuff that we're storing um in our brain, right? And to use in real time. So whatever reminders I can use to help me with the little things, right? I'm always gonna do that. Um, but with my JPY pairs, AUD JPY, Euro JPY, USD JPY, all JPY related pairs, right? Which is why the Tokyo session and that London overnight overlap. So the Tokyo session is from 5 p.m. to 2 a.m. Mountain Standard, right? Arizona time. And then you have the London session, which is from 1 a.m. to about 10 a.m., right? Which is it overlaps with our New York session, which we're in now. Um, the Tokyo session is the most volatile time for my JPY pairs, which is why, if we go back and we look at about 1700, that's at 5 o'clock, right? We got, really all this movement, and then ultimately we got the move of the day, right? From this level all the way down to where we're at now, right? That started in that Tokyo session, right? And so now that we're in New York, we've accumulated because now we're going to basically enter another session of volatility. So that's why we're seeing that same type of price action amongst all three JPY related pairs. Um, Amongst all three JPY related pairs, and I love that I got that. I did that's a close below, right? And so just for the sake of this, just get me out of there. I'm cool with that. Take that L. Still about 585 bucks in profit on this funded account. 53,000 is our goal for passing this challenge. First futures funded account I've actually done. I really am enjoying it so far. Love trading on TradingView. Tradeovate's been solid. They're partnering with Top Step. Top Step is who I have my funded account through. I pay $50 a month. It gives me access to 50,000. Now, of course, the longer I take to pass this challenge, the more that I'm just paying $50 a month, right? And so ideally, what the objective here is to get this account to pay for my freaking challenge, right? Which is just $50. So that means I should be at least earning $50 a month on this so that I can trade for free, essentially. You know what I'm saying? I'm putting that together. Now, $50 is not the max payout that I'm trying to receive at all, but that's the minimum payout I'll say that I'm trying to receive. Um, and even though we're getting respect at this level, I want to stay consistent to my rules, and I didn't get it closed below that area on the 15 minute, which is fine. I did get it below on the 5 minute. So the reason I exited on this one was, like I said, because of news. We have news in 2 minutes. Very, very volatile time for the market, especially labor market. Labor market always tends to manipulate. Oh, and PPI. I forgot about PPI. And we have PPI. So it's basically CPI's, evil twin. Purchasing price index. This is on the business side of things. CPI is consumer price index. So the purchasing price index is essentially, like I said, on the business side of things, how much is it costing businesses, right? How much are businesses spending? Um, so yeah, producer price index, excuse me, measures the price changes. It is composed of six main price indexes. Final demand goods includes food. So yeah, what essentially businesses have produced. But what do we let's see? 12 seconds. Let's get back to this chart. We're gonna get some volatility on this close right here. U, UJ. Look, here we go. Both ways too. Like it just goes both ways, right? So now you're looking at all my pairs, UJ pairs. USD has the most volatility. USD CAD will probably have. Yep, look at that. Same type of thing there. See what gold did. Look at gold, right? This is why I didn't want to stay in that trade. Because yeah, it could benefit me, but could also completely screw me. And so I just need to be patience, patience, patience. And then so based on what's going on here, I know, oh my gosh, look at this, guys. Look at watch how beautiful this is going to line up. All right. So if price, so based on what price is doing right now, based on how I understand the macros, what should be true, I haven't looked at the data yet. What should be true is that we get strong labor market data, right? We get strong labor market data and or strong PPI data, right? Because the dollar is showing strength by what's happening right now, we that's what should happen, right? Should. I didn't say that's what's going to. That's what should happen, right? And now there is a chance that I go to this MyFX book and that is not the case. If that is not the case, we are going to sell off because this is manipulation. If that is the case, then like and price is confirming the what the fundamentals actually did, then I'm gonna wait for a correction and then we're going long, right? But what we need to check and actually verify that because not all the time does price communicate the same thing that news just gave us, right? Sometimes it says the opposite to manipulate us. Remember what I said about the microwaves, right? This is what I'm talking about. That initial news response has to do with the microwave. It has to do with the sentiment, right, of the now moment, right? And then if we go to, so before I get into that, when then we go to this, let's refresh this and see if this has changed at all, right? Let's see if, okay, so hasn't changed really much, right? It's kind of fluctuating between this neutral range. So let's check to see how our news came out. Look at that, right? Initial jobless claims as expected, continuing jobless claims, bullish, right? This is what they expected. This is what it was at, right? A lesser number is better because we don't want people jobless. So the more that people that are jobless, the more, right? So let's just talk about this for a second. The more people that file for unemployment are basically saying they do not have jobs. Since they do not have jobs, they cannot spend money. Since they cannot spend money, the person that is actually working cannot earn money. The person that cannot earn money cannot spend money. And then it's just a cycle. Shout out Ray Diallo. Ray Diallo breaks that down so beautifully. Me and Q probably, I can speak for both of us. We've probably watched one Ray Diallo video. There's one Ray Diallo video that we probably watched more than 10 times, right? To really just, and now that's aiming on the low end, right? But to understand the cycle and how the money really works, right? And how the economy and the dual mandate, there's a reason that the Fed, our central bank, when you hear the Federal Reserve, that's our central bank, right? There's a reason why they have a dual mandate, price stability and maximum employment. That's their dual mandate. That was given to them by Congress. Follow this. Whatever implement, whatever, follow this. Make sure it's stabilizing prices and maximizing employment, right? And so we have that there, right? And then PPI, those are fine, but this is really the main one, purchasing price index. Now, this one I don't think this number should be high, right? This isn't a number we want to be high. So, yes, even though it says a better than expected result, that's only because it's greater than this number that they projected, right? But in my humble opinion, I think it's misleading. I think it's misleading, right? And what I'm gonna do to enter a buy to get back in here on gold, I need to get my lagging line above price. So I need to get this white line I need this white line to get here above price. Once that happens, I'm back in on gold. We see the respect that came in at that VWAP, at that volume weighted average price. And what else did we get at that level? Come on, talk to me. What else did we get at that level? Where did that respect come in? Right? Respected at what level? Decision making level. Keep looking left. Keep looking left. Boom. Decision making level. Three candle structure. Even with volatile news, we still see that sign language from price. Like, hold on, man. Hold on, bro. There's no way of just making sure I'm seeing this correctly because I know I'm not crazy. Just sometimes, I'm like, hold on. Let me make sure I'm not crazy. And I know in this instance, yep, I'm seeing that correctly. I'm seeing that correctly. All right. So that's what I'm waiting for there. Yeah, so I don't like I said, I don't think let me do this so I don't miss anything. I don't think that is I don't think we want a low number. Like I was saying, um, yeah, like I don't think we want this number to keep increasing because if it keeps increasing, if we click on what this PPI means again, right? So when it comes to commodities supplied for personal consumption, capital investment, government, and export, the producer price index, which I'm about to just just, just quick, slow. Come on. So it's about 50. Let's go. Let's go. I'll take that right there. Reaction I got from that, respect there. I got liquidity below us on the left here, right? This area. Fresh volume, 5 minute, clean level there. Fresh 15 minute, clean there. Like I said, accumulation, similar to what we had over here. Accumulation, news, then bought us up. Accumulation, news, hopefully um, I won't say hopefully. We'll see if it can get us down. Because like I said, my perspective on this PPI folder, right? Like I said, even though we got quote unquote bullish news, I do feel this is really misleading because and it says a higher than expected figure should be seen as positive or bullish for the USD, while lower than expected figures should be seen as negative or bearish for the USD. Let's figure out why it's saying that. All right, so let's see. The producer price index for final demand is used in the United States to measure price changes. It is composed of six main price indexes: final demand goods, which account for 33% of the total weight; So final demand goods accounts for 33% of this total weight, which includes food, energy, and final demand trade services, 20% of this total weight. Final demand transportation and warehouse servicing, 4%. Um, Final demand services, less trade, transportation, warehousing, 41%. Da, da, da. Yeah, and so if this is going up, it's this is telling us that all this stuff is costing more. So this right here that's weighted at 33%, goods have increased by 0.4%. The final demand goods for the producer, right? That's increased by 0.4%. If that's increased by 0.4%, now in turn, that does essentially say, okay, since prices are going up, there is a greater demand for the dollar, right? Because if you're buying stuff in dollars and now things are more, you now need more dollars to buy stuff, right? And on this side of things, if producers are having to pay more to produce goods and whatnot, then they're paying more for those products. They're paying more of what? They're paying more dollars, which means the demand for the dollar is higher, right? So I do believe that is why they're saying this is essentially bullish for USD. But for the macros and for it actually impacting, I in this scenario, I do not believe this is giving us the accurate picture of what is going on. Okay, so that's why I'm playing like that. That's my sentiment, right? That's my perspective. It's different amongst everyone else. That's why my FX book is reporting this as a better than expected result. If this was my platform, I probably would make sure that this does not say better than expected result. Or, well, it's only saying that because, well, yeah, I wouldn't want it to say that because it's misleading. Like I said, it's misleading in my opinion, right? And if I'm wrong about that, that's fine. I've been wrong before. I can be wrong again. There's nothing wrong with being wrong, right? But I don't believe I am, right? Because this is perspective, and you can't say somebody's perspective is wrong. Not okay. Anyway, PPI, of course. So that was all. That was all solid. That was all solid. We'll see what happens here. No more news for the rest of today. I mean, we do have news, but like high impact folders, um, important folders though, to just be able to understand. I mean, 4-week bill auctions, 8-week bill auctions. These have to do with like treasuries and government securities. Just seeing the fluctuation of these, it just tells us the type of capital that is coming into the U.S. Um, so, let's say that this 4-week, it so let me just make sure I'm going to say this correctly. If so let's take the 4-week bill auction, for example. If that percentage goes up, what that percentage is based off of, it's essentially just the yield, right? So that is what investors would earn on their investment over that 4-week period. So that's the duration on it. Over that 4-week period, that's what investors would earn. Um, and so if that number increases, essentially what that is saying is it's going to benefit investors more that get into those 4-week bill options, which is going to increase the demand for those securities. If it increases the demand for those securities, how are they going to be able to buy those? They're going to buy those with the dollar, which is going to increase the demand for the dollar, right? If those numbers go down, that is telling us that now their investment's going to be worth, it's going to have a less percentage, meaning we could be in a scenario where capital is being split into other more risky assets, right? And so this is something that I'm really wanting to understand, like the government securities and the bond market as much as I understand the forex market, because that's essentially that's a gateway. That's a gate that will improve my edge. As I look on my cheat sheet, U.S. bonds are a risk off type of asset, right? That's why I was saying if that number increases, then we're essentially in a risk off scenario. More demand will go into that dollar. And so when those numbers decrease, we're no longer in a risk off um, sentiment. We're no longer in a risk off sentiment. So yeah, I'm in this short on UJ right now, EU. And what is this telling me? What is this telling me right here? Oh, this is so beautiful. What is this telling me? Right. And I'm gonna look to enter on one of these. Let's see which one do I like the most. I do like the way AUD is shaping up right now. So I would basically be trading from this level to this level. That's what I'm looking to do. And then if I enter on EJ, this level to that level. That's what I'm looking to do. Right. But the only thing I don't like about this one here right now is this volume down here on my 15 minute. Still open up some room for correction. I do like AUDJPY because it's showing me the opposite. It's showing me that, the buyers essentially already have, tried to step in. So I just want to see how it reacts to this level. The reason I like this so much is because me being in shorts right now is telling us that the yen is gaining strength against the dollar. Since we got that PPI news from the dollar, my sentiment and my perspective on it is putting downward pressure on the dollar because of PPI. Um, and um, So it's moving us towards the more safe haven type of asset. USD is looked at as a safe haven asset as well, but that's why we also have to look at the fundamentals because we some of these economic indicators tell us what like inflation could look like and kind of give us some insight on inflationary pressures and PPI, like we just read something that is basically telling us producers are paying more to produce goods and services. That is essentially an inflationary type of um, result, right? And so if it's an inflationary result, then investors want to move their money to more secure, safe haven assets, assets that are less risky, that are opposed to inflationary measures, which the yen is one, right? And if we think about euro, USD, and as we're getting this break here, AUD, USD. Yes, sir, right there. Just took a short on AUD USD. You see, so this was a good example of me adjusting my stop loss. If I'd left it on the mean, it was gonna be like 60 pips, right? So what I did was put it above this bottom band here, right? So if price comes up and closes above this bottom band and it takes out my stop, that's gonna just invalidate my trade, which is fine. I have this 5-minute decision-making level that's going to give me some support to act as a force field to hold price downwards. And when I say some support, I'm not referring to support and resistance. I'm saying that it's going to aid price in keeping it downwards, right? It's gonna act as that force field in keeping price downwards now that we've broken below it, right? So I have that one there, and then also on this 5 minute on the same level, I have that decision making level, right? And then so just to prevent myself from being liquidity, I made sure it was not at this candle because this is an area that of liquidity that can definitely be swept before we continue headed downwards. That liquidity came during an area of accumulation, right? So just a good area for price to correct towards if it wants to correct some more before it does head downwards. But then just following the same sentiment as I essentially did with UJ and understanding that the yen you know is what seems to have the upper hand at this current in time. Um, Euro JPY would have been beautiful as well. I'm not opposed, still not opposed to entering on Euro JPY 160. I just want to make sure, my stop is always manageable. That'd be about 50 pips right now. So yeah, I'm good on EU. If it wants to correct, that's fine. I'll take it. But I'm already in two other entries right now, so I'm good with that for now. Definitely want to see how this ends up though. It's a beautiful area to travel to. I'm behind this order block right here. It's 1 hour order block. And just move right to that level. Gold fell down, which I don't think it's gonna stay there. Thinking about safe haven asset. I'll be looking at something like this on gold. Oh, that's gonna be a banger. Yep, that's gonna be a banger. Let price come down. Let price come down. Test, test. All right, so I'm looking for price to come bounce off this 15-minute decision making level. But if it does not want to bounce, that's fine. Price is not always going to do what I want it to do, right? Does that mean I'm not gonna react? Absolutely not. That's not what that means at all. But what I'm analyzing is how it's responding to my VWAP, right? So that's why my alarm keeps going off when price crosses this VWAP, this volume weighted average price, and it crosses the mean, right? That's when it goes off. Once we get above the mean and we close above the mean, I'll go back down to my 5 minute and I'll look to pinpoint an entry. The deeper correction I get, the higher we can go. That's essentially why I'm saying this area, and not to mention, my favorite three candle structure, the sign language of, the way I interpret buyers and sellers, right? That is that level that I'm essentially wanting to play off of. However, that's not going to stop me from entering if, like I said, I get a close above, this mean, right? We're already playing in a decision-making level right now, right? And so now I'm just analyzing volume down here, which if you take a peek at this weak volume bar there, that's telling me there's a potential chance that sellers are losing pressure, right? So when did that pressure begin? That pressure began right here. How did we know that pressure began there? Because that was the last buying volume bar that we got, right? This was the first week buying volume bar we got. This was one of the last ones before we then, kept moving downwards, right? And that was at the peak of this move here, right? And at this point, I was in profit, probably like 150 bucks. But that's not what I was trying to get there. Now could I have closed my profit out and collected my profit? Because what can you not do? You can never go broke taking profit. At the end of the day, I'm really focused on sticking to my rules, and sticking to my when I have my position marked and sticking to that risk ratio. So I like doing a 1.5 to 1 reward to risk ratio. Or for short, what I like to say is a one to one and then some. Right. So I'm trying to get a 1 to 1 and then some. Right. So I'm also like saying I'm willing with this market, right? And with trading, like with the things that I want in life, let's just say that I'm willing to risk as much as I'm willing to take, right? So I'm willing to give all I need to give in order to get what I'm in pursuit of, right? And so even that principle applies directly to the chart too. I can't expect to only risk freaking my pinky and then expect to get a whole arm and leg, right? And so what I mean by that is I can't expect to risk, you know, if for risk to reward ratio purposes, I can't expect to risk one to get four, or one to get nine, or one to get three, or one to get two. Are those risk ratios available? Absolutely. Will I take trades where I can execute on those risk ratios? Absolutely. But I'm really confident in my edge, and over a long period of time when it comes to the understanding the nature of probabilities, I know that with my edge, if I execute my edge to a T over a long period of time, the probabilities will work themselves out. So my 1 to 1 and then some is always going to make sure that I'm in profit, right? So yeah, that's what I'm looking for right now. Price is struggling at this level, which is fine because we're only not even an hour outside of news. Post about 8 o'clock, 8 o'clock, 8:39 is when we'll start to get like the post news movement. And then I normally see the market slow down, or I'm not gonna say. I personally do normally see the market slow down at 11, right? But that's not to say that it will, because the market doesn't close until 2, right? But that's what I'll be looking at for gold here. And then I'm still in my UJ trade. I'm still in my AUD JPY trade. I did not enter EU. I did not enter Euro JPY, and I did not enter CAD, USD CAD. So, in the four pairs that I like to trade Forex wise, I'm in two of them right now. Currently 0 for 2, so we'll see how this ends up. It's either going to end up 2 for 2, 1 for 3, 0 for 4, whatever the case may be. I'm going to take it for what it is. Have really proper risk today, so I'm cool. Like I'm good. Like the position I'm in right now, the only fault I will say that I have had today and yesterday is logging my trades. Now I can go back to each of my trades. I've taken like notes here in different areas, like on my phone, because that's where I took a few trades. Well, I took that one trade yesterday on my phone. Um, so I will have some extended time on my hands to go in and fill my trade log out and make sure that is up to date, because that's important for data analysis purposes. But yeah, that's where I'm sitting right now. So let's get it.